Good morning, traders. It is 8:01 a.m. Chicago time on Friday, the 1st of July, 2016. Welcome to July. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I get the feeling my mic's a little low here. Let me adjust it. That should be better. All right, so looking at what we have overnight here, the key news items are involve Puerto Rico's default on its debt. Not sure how that's affecting the market. Our legislative branch has passed a law to help them restructure their debt. They have $70 billion in debt. I don't think that's affecting the market much. As far as other news, the biggest things that I'm seeing right now is that bond yields are making record lows with the 10-year note pushing record highs, gold holding on to the 1300 plus price handle, while equities have recovered pretty much the majority of the drop based on the Brexit referendum. The 10-year yield has touched 1.378%, and the 30-year has hit 2.204. Money keeps rushing into government paper. It's said to be as a result of anticipated easing by the world's central banks, again as a result of the Brexit issue. Chinese manufacturing sector continues to contract. The PMI fell to 48.6 in June, down from 49.2. The decline pushed China's manufacturing sector further into contraction, made for the weakest reading since January. The manufacturing PMI slipped to 50.0 from 50.1, suggesting that the sector is stagnant. Japan's deflation is intensifying. The consumer prices fell 0.4 in May, faster than a 0.3 decline in April. So despite negative rates in Japan, deflation continues to be a major pain in the neck there. HSBC and Barclays say that they will stay in the UK despite Brexit, that their operations are likely to be affected. Some of the banks in Europe have been getting hit pretty badly. But in case you haven't noticed, the FTSE was the strongest index globally yesterday. Looking at where we are now, crude oil is trading at $48, down 31 cents at 0.62. Crude oil had a big dive and nosedive into the pit close yesterday from 49.30 all the way down to 48.17. It lost $1 and some change. That was a really big move. I just could not catch it. But we also saw the end of month. I'll show you that in a minute. The end of month, end of quarter, end of first half adjustment at the close of the equities as well. So we're seeing these adjustments at the end, and there was just a ton of volume that went off on the close. Across the globe, the DAX is very strong. So what is strong this morning? Money is moving into the bonds. The bonds are up 1.52%. That's huge for a bond. It's trading in a 174, almost 175 handle. So new high territory for government paper, U.S. government paper. Gold again is holding on to a $16 gain, $17 gain at 1.25%. Then comes the DAX and the Euro stocks, followed by the yen, the euro, and the pound. What's getting hit today is crude oil, the U.S. dollar, the euro bund, and the U.S. indices. The Dow, Nasdaq, and S&P are all down, just barely. Basically, the NQ and the S&P are down between a point and 2 points. So not much. Markets opening imbalance this morning, right up against yesterday's high. So that's where we are. Let's take a look at what's ahead on the calendar. This morning, we're looking for U.S. manufacturing PMI final, 15 minutes after the cash open at 51.3. ISM manufacturing at 9 o'clock Central, 10 Eastern, 51.3 expected there too. And then construction spending also at 9 o'clock Central, 10 Eastern, 0.6%. And then we have our Baker Hughes rig count at noon Central, 1 Eastern. And as far as speakers, we get ECB's Weidemann at 10 Central, 11 Eastern, and we get Fed Speaker Mester at the same time. Okay, so that's what's on deck for today. Let's look at the charts. So let's start with what was expected yesterday. Here's the primary hypothesis from yesterday. Yesterday I was looking for an open auction out of range. I was expecting it to push the overnight high at some point, and then start to rotate down and come into balance. This, as I said yesterday, this would be the normal behavior of an auction that is occurring at the point of control. Not seen normal behavior. We've had a lot of gaps beneath, a lot of gaps above, with the Brexit gap just above us. And what we did yesterday is we basically completely filled the Brexit gap in the S&P. Here it is. Hypo 2 is what worked out. Hypo 2 had us pulling back and then running through, and the target was 76, 75, 77 is the mid of the Brexit gap, and then the extended target would be the 89. It says 88.75, but it's really 89. That closes the gap zone. Okay. So, so that's where we are. As far as what we're expecting today, here we go. If you're hearing dropped frames, just dial back the scale, the time scale to hear what was going on. So here's how Hypo 2 worked out. So we were looking for the potential for Hypo 1. Again, Hypo 1 was looking for a push up, then a drop into the range, and then a drop down to 42, which did not work out. Hypo 2 was looking for an open auction, which we got. We got an open auction right there. It's pretty much an open auction. You can see both sides are active. It's not going anywhere. A push into the prior day's range, and then a push out, and then continuation higher. Oh, we're losing frames. And then a continuation higher, and then that's what we got yesterday. It was kind of a picture-perfect Hypo 2. Although it's another trend day, the possibility of yesterday being a trend day after Wednesday's trend day was very small, according to my back testing, or historical probability was around 12%. The probability that today would be a trend day is around 4.5%. Historically, based on a sample of about 2,500 days, which had out of the 2,500 days, we had approximately I think it was like 300 days or so of trend. Based on that sample size, the probability that we would continue on a trend day up are around 4%. Again, that does not mean you should sell. You should sell at the open and just hold on all day and just, bank. That's not what I'm saying. But what I will not do is plan for another trend day. However, there is something that is at play here, which has little to do with the auction, and the fact is, money is moving into treasuries and gold, which is telling us that there's potentially some information there that there's going to be some sort of QE kicking in, and so with money moving into treasuries as aggressively as it has been. I'll show you. For example, the 10-year note here, we're talking about it in the chat room this morning. So the 10-year note is at all-time highs. It's pushing all-time highs. As the 10-year futures push all-time highs, Yields are going down, as I had mentioned. The yield on the 10-year um, has dropped to 1.378%. And what that could mean is that the market is expecting more money um, to flood the market. So this is why money is moving that way. This is why folks are hedging their wealth with gold by pushing money into gold. So there's something going on a fundamental basis. That's my point. On a fundamental basis, there's something going on that is pushing the market the way it is. We're leaving a lot of gaps behind and so forth. So yesterday, given the stance and the way the 10-year opened, my expectation for the 10-year was a push higher, a chop to find sellers, and then to start moving down. And that couldn't be farther from the truth. It was absolutely wrong. Instead, we did is we pushed back into the range, started to move down very aggressively. Look at these moves in the 10-year, very dramatic movement in a product that's not so dramatic. And then it started to drift back up into the range of this consolidation from post Brexit. So there's something going on here. What this is telling us, and these are the facts that we see in front of us. There's something going on here. Somebody knows something about the way the market, what's coming down the line, and what's coming down the line is potentially easing of some sort. Okay, although most banks don't have much room to do any easing, but we can always print more money. Let's look at where we were overnight. I know there's a lag. Um, it's unfortunately, but my broadband at home, as high a bandwidth as it is not able to keep up. Um, Overnight, all we did was balance in the acceptance zone of yesterday's high. This was yesterday right here. This was yesterday's range. You can see that the point of control moved to the top. We have a string of singles beneath us. Um, and what the market did is traded and accepted this zone here. The market's in complete acceptance uh, right up here into the overnight session, including Europe. Not much to do, not much changed overnight. So I expect the market to pause today. And I want to remind you that it is 4th of July weekend. A lot of folks are going to head out very, very early. The market's likely to go into a slow slump from the European close onwards. That means 11:30 to 12 o'clock Eastern onwards, we're likely to see the market get into a very choppy environment. Again, I said it yesterday and I was wrong, but it's not the day to go and try to catch every breakout. Let the market break out and then trade your pullbacks as opposed to trying to be part of that initial move. Being part of the initial move is very, very expensive. Overall, it just isn't worth staking your money on because for the number of times you get it right, there's a tremendous opportunity to get it wrong. So yesterday we pushed out, we hit the point of control of this balance zone from back here from pre-Brexit and the mid of the Brexit, pulled back for 4 points and then pushed through and never revisited. So this morning we are opening right at 2089.75, right in here, right against the close. The expectation this morning is almost exactly the same as what we had yesterday. Basically the same hypotheses, except we don't have the gap zone above us. The expectation for Hypo 1 is to push higher, find those sellers, and start to rotate down. I'm keeping this gap zone up. This gap zone has been pushed through from below, has not been tested from above, and it'll remain on my charts until we do so. The expectation is for us to push higher and then come back down. And again, the target is 2077 below. That's what I'm looking for. Again, this could, just like it was yesterday, could be completely nullified by what Carney said, which is the Bank of England will do whatever it can to ease the pressure. And so that's the primary hypothesis, but it doesn't mean that I'm going to get in here and sell the market. I'm not stupid. So what I'm looking for is for failure. I'm not looking to catch the high, as many people somehow can on Twitter all the time and supposedly do. I'm not that trader. What I'm looking for is that failure. I'm looking for the market to test the high and fail down before I start to trade from the short side. But the natural auction is what I'm putting out as the primary hypothesis here. But whatever the market does, it does. It's just the way, the nature of our business. We have to respond to what the market does. The secondary hypothesis, again, the same as yesterday. An open auction, drop down, look for sellers, and then start to move up. The target becomes 96.50, and then the extended target is the scene of the crime from Brexit, brings us back into line with the auction at 2106.25, 26 and a quarter. 2106 and a quarter becomes a target for hypo number 2. And those are the two main ideas of the day. Hypo 3 is an open auction test higher, test lower. There's a string of singles here at 79.50 or so, and then the expectation is it sits in the middle and continues to accept yesterday's balance zone as we go into the 4th of July. So that's hypo 3. Again, it is the 4th of July, okay? Weekend. So we're expecting it to be quite dead in the afternoon. And of course, Monday is off. The futures are open on Monday until noon Central, but the equities are off. Okay? So that's where we are, and hopefully you found that useful. It is Friday. You're going into a holiday. Not smart to stake a lot of money on any particular trade. Just trade smart, not with your emotions. Trade with your logic. Okay. Good luck, and I'll catch you tomorrow, or catch you Tuesday. Actually, take care.